Good evening, everyone. Welcome to February's Open Mic Night. Tonight, we are here with Liz Robinson with the Garden International, and she's going to talk with us about using financial statements to make informed decisions about our farm enterprises. Just a few things before we launch into our program this evening. You guys are pros at Zoom, so just ask that you keep yourselves on mute unless you're speaking, just so we can cut back on some of the background noise. Just wanted to let you know about our upcoming spring programs. Of course, we have Liz tonight. In March, we're going to be joined by Linda Jones and Stephanie Young. If you guys want to wave, you're welcome to do so. They're going to be speaking with us about companion planting, intercropping, and relay cropping on our farms. In April, we'll be joined with Carol Allen. She's going to talk a little bit about food safety considerations, and then maybe tell you about GAP and some of the other and the produce safety rules, some of those things that are important for you to know about if you are growing produce on your farm. And in May, Armand Melanian, if Armand wants to come off video or come on video or wave, he's going to be talking with us about stormwater management for urban farms and some of the stuff that he's been doing. And then we're going to take a break over the summer, and we'll be back in September, and a couple of programs that folks have mentioned that they would like, talking a little bit more with Morbidco about some of their loan and grant programs, disease management, integrative weed management, maybe a pest management part 2, and also maybe some more information about understanding the zoning ordinance. So this is a lot of the core groups. If you have particular desires for particular topics, please reach out, and that will help inform how we proceed with September, October, and November. All right. So with that, I'm going to go ahead and turn it over to Liz.
Hi, everybody. I am going to go off camera while I'm sharing my screen so I can navigate a little bit better. But if anybody wants me to come off and answer any questions, I'm happy to do that. So give me 1 second to get started on sharing. I think I'm frozen up. Can you guys still see me? Hear me?
We can see you. We're not seeing your screen just yet, but it says that you've started sharing. It might just be a little slow.
Yeah. 1 second.
Okay, here we are. He's showing.
There we go. There. Can you see my screen?
We sure can.
Okay. Okay, so we're going to be talking about using financial statements to make informed decisions. And as Kim mentioned, my company is the Garden International. I have a gourmet mushroom farm, and I also have a nonprofit called the Gift Legacy Foundation, and some other organizations, but we won't go over that. Beyond being a farmer, before that, I was in finance and accounting. I was an auditor for a public accounting firm. I used to audit a lot of nonprofits and also the Army benefit plans. And then after that, I went on to Marriott corporate headquarters. I did a few different jobs there, a little bit of financial management, managing some of their investments, their owners' portfolios, and the budgets for the human resources departments there, which was altogether about like $6 billion in different portfolios. So I had quite a bit of different experiences there. So I'm looking to always continue to share that information, and the type of stuff that we got into for a big company can be used for small companies as well, and growing companies. So I'm always looking to share that. So you might be thinking, well, why is this important when you really need to be spending a lot of time in the field, cultivating, talking to customers. But some of the reasons why this is important is because you want to be able to identify risks and opportunities in your business. You want to be able to identify sales trends. It's important to know how to price your products. You know, if you price below the point where you can even break even, that's not going to be a sustainable business model for you. You want to assess how well you did last season and plan for what you might need for the next season. You want to understand profit margins. And then you want to also look at how you're going to grow your business, how that could look if you wanted to scale it, if you wanted to get a new property, if you wanted to apply for loans or even some grants. Also ask you to share information about production and profitability. So what that looks like in practice can be a lot of different things. I know this is really small text, so when we get into it, I'm going to zoom in a little bit in another screen. This is an example of an income statement, which is also called a profit and loss statement. So sometimes you'll see it just referred to as P&L. And most of you have probably seen this, but basically it shows all of your income and all of your expenses, and then ultimately what your net income is, which is the profit after all of your expenses. It can be as detailed as you want it to be, or it can be super simple. It could just be income and then a couple line items for expenses like labor, rent, and supplies. But one thing that you're going to want to really consider is whether you want to, how much time you really want to spend on inputting some of this detail. So this is just an example. This isn't my P&L, but I do all of my recording pretty much in QuickBooks. Even though I have a background in accounting, it's just easy to use simple bookkeeping software like QuickBooks. And you can build out your financial statements however it allows you to best track your income and expenses. So when you're in a program like QuickBooks, you build what's called your chart of accounts. So depending on whether you want to have detail as far as all the different sales, like let's say for Stephanie grows flowers, so she might want to track her bulbs separately from her seeds and separately from her nutrients or anything. Like she might want a really detailed level of tracking, and that can be really good when you're reviewing things, but it also takes time to track at that level. Like if you get an invoice from if you have a receipt from Home Depot that includes multiple things, you might need to break that receipt out into different categories. So when you're thinking about using financial statements to perform analysis, think about the time that it takes to record those things a certain way versus what you'll gain by being able to have visibility over that. So on this, you can see this is an annual financial statement. This basically is just everything from January to December, all totaled up into one column there. You can also look at it from a monthly. So monthly is really good because you can identify your cash flow needs, especially if you're using cash basis for your financial statements, which I'll go over in a minute. And you can also identify trends, like let's say you can see here that sales in January were much higher, but then in February, March, April, they started to fall off, and then they pick back up in August. So this can be an opportunity where you look and see, okay, I'm only making $100 in February, but I'm still spending the same amount of time. Maybe I'll take February off and use that to rest and then, come back stronger in March. So when you track things by the month versus the year, you can identify trends at a much deeper level. You can also spot things like errors. Like you can see here in the gross profit for February, that's a negative. Well, why? Is there something in here that's throwing things off? Did I have some returns or something like that? When you look at it at the annual level, everything looks good. But once you dig into the monthly level, you can kind of see, okay, there might be something going on there. And then you can also identify risks and opportunities a little bit better just by seeing more detail. Any questions so far in those annual versus monthly? Okay. So one thing I wanted to go over was accrual versus cash basis. I don't know where everyone's knowledge lies on this, so I'll kind of just give you a general overview. For a cash basis, that's basically like literally when cash leaves the door or comes in. You're just looking at any activity in your bank statement or your physical cash that you're taking it and you're recording it at face value. You're not thinking about invoices like accounts payable. You're not thinking about insurance payments, spreading the payment over several months. You're just looking at what cash goes out and what cash comes in. And so, for example, take the insurance. You might pay your insurance for the entire year in January, and you'll have a big lump sum payment in January, but really you're using that policy the entire year. If you were on an accrual basis, even though you paid it at the beginning of the year, every month as you use that insurance, you would be recording a journal entry basically to say, okay, now I have this expense in the month where it's actually relevant. So that's the biggest difference between accrual and cash basis. And also accrual takes into account accounts receivable. Like if you sell wholesale and let's say you made a big delivery to Safeway, but they haven't paid you yet, you're going to show, okay, I have an accounts receivable on my books, but your cash won't reflect that. If you're on cash basis, your cash is only going to reflect that when you actually get the payment from them. And the differences between those are a little bit, it can be helpful in some ways to use cash basis because you can really get a feel for when money actually moves. And as a small business, you're going to be mostly concerned with, do I have enough cash to cover my expenses? You know, my tangible expenses that I have to pay right now, or my salaries that I have to pay right now. And it can really let you hone in on what activity is happening when. But for certain things like taxes, for, you know, special types of loans, like you can get loans based on your accounts receivable if you have big accounts receivable. So that might be an opportunity where you want to look at, okay, do I transition to accrual accounting? And that's also going to allow you to kind of get a better feel for what's coming down the road. Like if you know you have a big invoice that comes up every single year, like you have to make a loan payment at the end of the year. Well, if you do accrual, you can start to look at all of those future expenses. That's kind of a complex theory for some folks, so I'm happy to answer any questions. Are there any questions on like accrual versus cash basis? Or have you heard of those things before?
Liz, I have a question.
Sure.
Okay, when you say cash, people may not know it's not just cash. It can be any money that comes in. Is that what you're?
Correct. So
Yes.
cash basis is like an accounting term. It just
Mhm.
tells you when money actually, it's recording transactions based on when money moves, whether that's
Mhm.
tangible dollars and cents that you get in hand, or whether that's payments that you get through Shopify from orders,
Mhm.
or whether that's credit cards you take through Square. It's whenever money is
Checks.
actually exchanged. And on the expense side, it's when you actually pay an expense, not
Mhm.
when you get an invoice.
Okay.
Hey Liz, we have a question from Daryl Lynn, and she wondered if you have any sample spreadsheets that you might be interested in sharing.
Like as far as what, income statements, balance sheets,
No,
analysis?
the slide that you had that broke down the income and stuff, it'd be nice to just have a blank one so I can just swap my shit in there.
Yeah, I can send you this. You know, it's obviously not going to be, you're going to want to tailor this for your specific situation. Like you can see, obviously, like for this example, I broke out different types of advertising like social media, websites. I included different types of income in here, but you know, you may only have one, or you may want to just track things a little bit differently, but this kind of gives you a blank slate if you want. And Kim has this slideshow. So she's going to send this. I can also send her the Excel sheet. But there's also, I mean, there's tons of resources out there for it. There's also specific enterprise budgets and examples of income statements and balance sheets from organizations like Cornell University that does a lot of this type of work. especially enterprise budgets. So they look similar to this, but it's basically helps you plan for planning purposes if you haven't actually done this yet.
Thanks.
No problem. So I'll send Kim these Excel sheets and then some resources from a couple other organizations. Any other questions? I know I just covered like a ton of information in just 3 slides. Okay. So again, with detailed versus simplified, you need to think down the road, you know, how do you want to improve your business? How do you want to grow your business? What types of funding sources do you want to have? What's your metric for success? You know, do you want to hire people? Do you want to have a bigger farm? And then, you know, think back from there, what will help you get there? So one thing that you'd want to consider is fixed costs versus variable costs. And I'll go over that a little bit more here. Here's some tips for analysis. So when we talk about fixed costs versus variable costs, fixed costs are things like rent or mortgage, insurance, your website that you might pay for up front, utilities, you know, anything that's pretty much going to be the same, whether you sell 1 item or 1,000, those are generally fixed costs. And that doesn't mean that they're always going to be fixed. There's usually a certain capacity within that before you have to go up to the next level. Like let's take, you know, rent, for example. In my situation, I rent a warehouse. That's where we grow our mushrooms indoors. There's only so much that I can grow in a small space before I have to start looking at additional spaces, which means, yes, my rent isn't going to vary from 1 month to another based on how much I sell, but I can only, let's say I can only grow, you know, 1,000 pounds a year, for example, then it's fixed, but it can change based on your capacity. Also, you've got things like variable costs, which is packaging, you know, seeds, credit card fees for each transaction, anything else that varies based on how much you actually sell. And you really want to look at those things and I understand them, because it'll tell you, one, like I said, what your capacity is when you're looking at, like, let's say you wanted to get a bigger farm. And you know that ultimately you have, let's say, for every head of broccoli that you sell, you know, you have about $1 of variable expenses. So let's say you sell it for $5. Your net profit is going to be $3.50. How many heads of broccoli do you need in order to cover all of your fixed fees? And how many would you need to sell if you got a bigger farm? So understanding those two things, fixed costs and variable costs, can help you make decisions like that. Does that make sense? Do you guys have any questions on those fixed versus variable costs? All right, little accountants. And then when you're looking at, when you have those information pretty much solidified and you know, okay, this is my variable cost per unit, this is my fixed cost, I need to sell X number of units in order to cover my costs. And if I sell, you know, 1,000, that means I can hire another person. Or if I sell 5,000, I can pay myself an additional 10,000 a year or something like that. So it's really important to know where those items really benefit you and where the opportunities are in those 2 items. You can also look at opportunities for price breaks, like your variable costs. It may cost you $1.50 to grow a head of broccoli, but if you grow a lot more, then you can get a discount because you're buying more supplies. So your variable costs may also go down as you increase your units. So you can, once you have the method of determining your variable costs, you can always change it. Like, let's say, in order to grow broccoli, you need nutrients, or you need compost, you need barrier tape, you need water, just all the things that you need in order to grow that broccoli. Okay, if I sell 1,000, if I need to grow 1,000 units of broccoli, this is what all my costs are. But if I want to grow 2,000 units of broccoli, that means I'm buying more nutrients, I'm buying I'm buying in bulk. So now my variable costs per unit go down. So when you really understand what you're looking at, you can flex anything one way or another. You can take a break, you can do more, and you'll really have a good handle on what those changes will mean for your business, good or bad. And then when you're looking at your financial statements, you can also understand what your gross profit is. That's the sales less the cost of goods sold, all of those variable items that I mentioned. That's going to be your gross profit in dollars. If you want to understand your profit margin, you just take your gross profit and divide it by your total sales, and that's your percentage. If you want to know what your net income is, that's your gross profit minus all of your operating expenses. And then your net profit margin is your net income divided by sales. So net profit margin is important because that's basically your owner's pay. Whether you pay yourself a salary up front, if you're a sole proprietor, whether you pay yourself or not, the government looks at you as your LLC is you're the same thing. So, anything that comes into the business, if your income is greater than your expenses, that's a net income to you, and the government is going to tax you on that. So you always need to understand what your net income is, and that'll also help you make decisions like, do you want to be taxed as a S corp? Helps you make decisions like that. And it's also going to help you when you're looking to take out loans and the bank wants to know, well, how much is available for you to repay your loan? They're going to look at your net income. Any questions there?
I have a question, and this may be sort of a silly question, but as you're going through and you're trying to determine how much you're going to charge for things, is there a typical percentage that you would mark up from, like when you're trying to determine your gross profit and all of that kind of thing?
It really varies by industry, but for the most part, most businesses, you're going to want to at least triple what your costs are, because your cost of goods sold there's probably the easiest thing to identify as far as your costs go. But then some of the things like what you pay yourself, what you pay employees when you don't yet have employees, some of your like overhead costs, like general supplies, marketing, things like that. You're basically going to have three pieces. It's going to be your cost of goods sold, your overhead, and then your net profit or your pay to yourself as an owner. So generally you want it to be about 3 times whatever your cost is, but that doesn't necessarily mean that it's going to cover your operating expenses, like all of your fixed costs. The reason being, like, let's say you buy a farm and your mortgage alone is $2,000 a month, but you're only growing 100 heads of broccoli. Well, you might multiply your cost by 3, but that's still not enough to cover all of your fixed costs. You might need to grow 10,000 units in order to cover all of your fixed costs. So you can see how, 3 times is a good metric generally, but that doesn't necessarily always protect you and make sure that you're covering all of your fixed costs. Does that make sense?
That makes perfect sense. Thank you so much.
Yeah, and I actually, there's 2 parts to this presentation because we only have a limited time. I'm kind of going over this general information about financial statements. But when you get this package, you can look in the back and there's a lot of information about production costs. I go over like basically how to build that off from the ground up, what to consider variable versus costs. You can see here I break down some like examples of what it might cost to grow, 10,000 bunches of kale And then you can see what that looks like for labor, risks and opportunities, selling expenses, overhead, allocating costs, allocation example. So there's a bunch of stuff back here that I'm not even going to cover, but it'll probably help you answer some of those general questions about how to price things and how to calculate your costs and what your per unit costs are.
Awesome. Thank you.
Yeah, my pleasure. Any other questions on this right here before I keep going? I'm going to leave the majority of the time for questions and discussions and detailed zoom in on any of these items. Once we get through this, we can actually look at the financial statements a little bit more in detail, so you can ask questions.
Question.
Yeah, go ahead.
Sorry. So when you say like gross profit margin or the other one,
Net income,
is that what it was?
gross
Net
profit
profit,
margin.
net
Yep.
profit margin.
Mm-hmm.
What does that say? Like, I don't understand.
What does it mean in real world terms?
Yes.
The gross profit is like, it's like,
Well, when you say the margin, like, is it like how much? Is it better? Yeah, it's obviously better to be higher. Yeah.
yeah, exactly. So the gross profit in dollars is like you take all your sales and then all of your direct costs. Like for example, again, going back to the broccoli, if you sell your broccoli for $5 a head and all the seeds and nutrients and everything it takes to grow directly, like all the supplies you grow takes you $1.50, your gross profit is going to be $3.50. But that doesn't take into account all of the things like your rent and you're paying yourself and all that. It's just literally what it costs you to grow the actual broccoli. And think of these things are not really like common sense things. These are financial terms. So don't try and equate it like to keeping your books, for your personal expenses. These are like accounting terms that it's just going to take you a little bit of time to wrap your mind around. But it just takes a little bit of practice and experience. So the gross profit is like your direct cost to grow that broccoli. Like if you already live in your place and you're not incurring any additional expenses, you don't care about paying yourself, you just want to grow that broccoli and get started, that's what it's going to cost you. But as a business owner, you want to be able to pay yourself, you want to pay employees, you want to have assets and properties, and you want to have net profit. You really want to be a profitable business so that you can do it for the long term. Then you want to look at the full picture, and that's where your net income and then net profit margin come in. The margin, the term margin, is just referring to the percentage. So gross profit margin is the percentage of your gross profit above. So gross profit margin is just a formula. It's the gross profit that you calculated divided by your sales, and that gets you your percentage. And what you're looking at, the reason why you'd want a percentage is not that it necessarily helps you to be better or worse. It's that it might help you when you're looking at other farms or other businesses. Like let's say you wanted to compare 3 different things that you could be doing on your farm, whether it's agritourism, cultivating in a greenhouse, or growing flowers. It's not always apples to oranges. Your dollar gross profit is going to be different for each of those, but your profit margin might say, okay, agritourism, the profit margin is way higher because I don't have all of these supplies. Whereas your gross profit in dollars might be higher because you're selling a lot more units, but you have to do a lot more work for it. So do those 2 concepts make a little bit more sense?
Yeah, thank you so much for explaining it.
Sure, no problem. And then the same thing with the net income and the net profit margin. Your net income is literally like what you're going to have at the end of the day, depending on whether you're cost basis or accrual basis. If you're cost basis, your net income is what is actually going to be left in your bank account, after everything is said and done. If you're accrual, that may not be the case because you might be waiting on some invoices, or you might have paid something different, a different timing. And then again, with the net profit margin, that's really more of a metrics for you to look at to say, what are other farms doing, or what are other industries doing on a net profit margin? And it's sort of something that people look at when they're, when they're looking at investments, or your bankers might look at that for your metric of success. Keep in mind, though, that farms generally struggle more with, profitability, but as urban farmers and farmers with a little more land that are in a metro area like ours, we have the opportunity to actually be profitable because we can sell direct to consumers and we know what we want. So the better that you understand your financial statements, once you have the consumer's interest and you have that loyalty and you know what they want and you have access to them, all this stuff is like easy. You know what I mean? You can learn this, no problem. You did the hard part. So getting this really just makes you attractive to be able to grow, because you can make decisions for your farm that are well informed, and you know how it's going to affect your profit margin, and you don't have to worry about laying off staff because you're not making enough to cover your mortgage or something like that, Any other questions? Okay. So one thing that's going to really help you to utilize these numbers better, this is the numbers, the financials, but unless you really know how much you're producing and the timing of it and how well you're selling that, that's going to be really what's helpful. So you might grow 10,000 heads of broccoli, but if you're only actually selling 5,000, and you're not keeping good records, you don't know, okay, I might need to cut back, or I might need to add new sales channels. Your total cost is going to be way higher. Cost per unit is going to be way higher if you have a lot of waste, and you don't know that unless you're really keeping good production and sales records. You also won't know what your true cost is per unit unless you know how much you're producing. And then it makes it harder to order and analyze your success from the prior year and order for the next year. So like, let's say seeds went up by 50%, and you really want to consider, okay, do I buy 5,000 seeds or do I only buy 1,000? If you don't keep good production records, then you can't make those types of decisions, and not knowing how much you're selling also will not help you make those decisions. And then you're also going to want to look at your sales by month. You might want to buy your seeds earlier, or you might want to consider doing a CSA because, certain months are really, really slow. And, you may even say, okay, well, like I said, February really is not worthwhile for me to be selling at this market. Maybe I need to just take February off and rest and spend time with my family, and, come back in March and do well in the months that work well for me. Or you might want to consider, how you can reach your customers in those months. You can also look at additional revenues through land or staff, like I mentioned. Everything has a certain limited capacity. While the possibilities are unlimited, it's not always makes sense to keep trying to push a certain asset or a certain opportunity beyond the point where it makes sense. Like I said, I know personally I'm outgrowing my space and I'm looking for additional spaces. But, in order to get the funding and things like that you need to grow, you really got to be dialed into what you're currently doing and what you will do, and how that might affect your net income and your ability to repay loans or pay yourself or pay staff or, anything really. All right, so let's see. We are at, what time is it? 7:42. So I can go a little bit more. We obviously have plenty of time. I can go more into these other items like production costs, but I wanted to leave plenty of time to kind of go over some of the bigger concepts or some of the details, or to just address like any financial questions that you might be struggling with right now.
Liz, I had a question.
Sure.
And someone asked me this, and I was like, let me do a little research on it. But since you're you're on the topic, I'll ask you. A person asked me, okay, what's the benefit of having an LLC as opposed to a sole proprietor if they don't have any employees, no, no, outside costs other than they're running the business themselves?
Mhm. I mean, there are benefits from a tax perspective. Like I said,
Mhm.
a sole proprietor LLC, you're viewed as, or I should say an LLC with one owner. They look at you like a sole proprietorship for tax purposes. But
Mhm.
LLCs have a legal structure to them that can protect you.
Mhm.
As far as like, if you can get a loan, let's say, for example, let's say your LLC has been operating for 3 years, you have steady income, you might be able to get a loan just under your LLC, and
Mhm.
that would then be separated from your personal credit.
Okay.
As a new LLC, you might still have to provide like a personal guarantee, but at some point your business might have enough credit to only get loans and things in it. You can also have, agreements or protection for risk under an LLC. Like, let's say somebody slips and falls, and if all of your assets are in your LLC, all they can really do is sue your LLC. They can't sue you personally.
Mhm.
Granted, I'm not a lawyer, I can't advise on it, but there are ways basically of separating your risk under an LLC that you can't do as a sole proprietor.
Because I think right now she says she's doing a she's sole proprietor, but I think she said she was thinking about a sole proprietor LLC.
A single member LLC.
Yeah, with no employees, because I don't have any employees either. But I was
Right.
like, well, I just do mine as a regular sole proprietor because I don't have a lot of risk right now. So until I start to see where I may have to incur more risk, I'll stay a sole proprietor, and then just see what happens with that.
You do still have the opportunity to, even as a single member LLC, you can actually
Mhm.
apply to the IRS to be taxed as a S corp, which is
Mhm.
sort of like being an LLC, but sort of also being taxed like a corporation, where you
Mhm.
can like pay yourself a salary,
Mhm.
which avoids that self-employment tax a little bit.
Mhm.
You can, and being taxed as an S corp allows you to be taxed basically on like payouts versus net income. Like, you could actually keep some money in the business without being taxed at a certain, taxed on that.
Mhm.
My specialty isn't necessarily in tax, but I would definitely say that there are advantages to each one, and to kind of get a better feel for how you want to pay your taxes. Like, as a small business,
Mhm.
it can be beneficial because it's simpler. The more complex your structure is and your tax situation is, the more expensive and timely it's going to be to record that stuff and file.
When you say simpler, for which one?
Like either a single member LLC or a sole proprietorship is a little bit simpler than a corporation.
Yeah. Okay. Okay. I'll pass it on. All right. Thank you, Liz.
Sure, no problem. But I would also say stuff like that, like there's programs like Operation Hope that give people like basic business education, like building a business plan, different like entity types, basic tax information. Like, if they're at the very starting point, they might want to take some of those, like those types of classes. Any other like general financial questions or financial statements or questions on the presentation?
This has been great, Liz, so far. And I guess if folks don't have additional questions at this point, I don't know if you want to go a little bit longer, and then maybe another 5 or 10 minutes, and then we can see what other questions we have at that point.
Sure, yeah.
Our drop dead is 8:30 for folks, so
Okay.
we can go up as far as people have questions or they just want to hear you present. So we appreciate you.
Sure. Dan, did you have a question?
Yeah, thank you. I had a quick question about the term enterprise budget. I've not heard that before. Can you explain what that is?
Enterprise budget is a look at all of the possible expenses and outcomes of your production. So it goes into way more detail about like your actual productivity. For example, when I was building my enterprise budget for mushrooms, way before I even started growing mushrooms, I pulled down an enterprise budget from Cornell University that actually put together production for mushrooms. And what it does is it looks at the average productivity based on the way you're going to be growing. So to be specific, in mushrooms, you have what's called a biological efficiency rate. Like the average biological efficiency rate is about 50 to 75% of your dry substrate. So if I'm using every bag of mushrooms that I grow has 2 pounds of dry substrate, which means that at a 50% biological efficiency rate, I'm going to grow 1 pound of mushrooms from that. That 1 pound of mushrooms will sell for $20. And these are all the costs that go into that 1 pound of mushrooms. So it like goes into way more detail about, you know, how you're producing, how much you're going to produce, what that costs you. And ultimately what you end up with is like a projection of all of your expenses and all of your income that's possible. It's a plan, so it doesn't always go according to plan, but it's way more than like QuickBooks or, you know, typical financial statements would do. And it's also those enterprise budgets are usually built out by universities after meeting with farmers that have actually done that in real life, and they pull in like metrics and costs and all of that stuff from real life situations. So it kind of helps you to basically build out what your operation is going to look like even before you start doing it. But it can also continue, it can also continue as you're actually doing that. So you can update that all that same enterprise budget with actual numbers once you've done it, and you can then make plans for future years.
So I could just like do a search like within the University of Maryland, their extension office for that term, like enterprise budget, and more than likely it will pop up as like a template or something.
Yes, I will Google like specifically for what you're growing. So what's your operation? What are you doing?
Well, potentially we haven't started anything yet, other than we've been playing around with garlic, and it's a specific type of garlic. And so I would be interested in seeing, I guess what garlic would the information for it.
Yeah, so I would like Google, and I would use Google because, you know, obviously University of Maryland is great, but you want to be as productive as possible and find all the possible, you know, results. So I would Google like enterprise budget for hardneck garlic, you know, be as specific as possible, because chances are these universities have tons of resources to do that type of research and put that together. And probably there's something out there for specifically what you're doing.
Okay, thank you.
Yeah, you're welcome. Any other questions before I flip back? All right. So I'm glad we do have some time. Can you still see my screen? Okay.
We can.
How do I get rid of this? Yeah. Okay. All right, actually, let me go back to these Excel sheets. So these are the Excels that I use just as examples to pull into that presentation. So hopefully this is a little bit more clear when you actually see it bigger. Again, all of this up here is your income. It it can be as simple as sales. You could break it out by category, like flowers, vegetables, mushrooms. You could break it out specifically by item, like, tulips, peonies, depending on how you want to track, you can get as detailed or as simple as you want. But think about how you would actually do that in practice. It could be, there are plugins with programs like Square, or pretty much all the payment processors where you can input your specific items. Like, let's say you have a Square register, you can put all of those, like garlic, mushrooms, all of that stuff in there, and then pull down reports at the end of the month for all of those sales. And you can upload that stuff, or you can manually import it into QuickBooks and break it out however you want to. Now, again, like I said, going back to, you have to find the balance between the benefit of tracking everything individually with the time that it takes to actually do that. Or you can just keep it, high level like this. Like, if you're cash basis and you don't actually get a lot of cash, like if you're cash basis, meaning you record money as it comes in and as it goes out, and you mostly get things through, electronic transactions, you can just go through QuickBooks and every deposit mark it as sales, and that's your sales. If you have a lot of cash payments, like let's say you're at a farmer's market and half of your income comes from tangible cash, then that might not make sense. You might actually have to record your sales a little bit more. But it's specific to your organization. And then down here, this is your cost of goods sold. So again, going back to how detailed you want it to be. For me in this example, like I included all of my grains that I use, all of the substrate, all of the bags, the boxes, everything is in here in supplies. And then shipping, I decided to track a little bit closer in this example because my plans were to start actually shipping my mushrooms at this time. So I was implementing a program where I was shipping mushrooms all over the country, and I wanted to see how much shipping would contribute to it. So I included that as an example here. And then even things like advertising, like if you decide, okay, I'm going to do a lot of advertising, you might want to know, how much am I spending on website ads? How much am I spending on social media? And how much am I spending on printed materials? Or you might just want to put that all into one category. So it really depends on how you want to track things. And then, of course, you've got things like general expenses, your rent, bank fees, all of that stuff down here. Meals, don't forget if you have meetings with folks, if you're meeting with your staff over a meal, if you're having meals to talk to a potential customer, or you're having a meal, let's say you want to sell to a new restaurant and you go in there to have a meal with the owner, all of that stuff is tax deductible. So, include it in there. Things like travel. Now, travel is one that you're going to want to keep good records on for sure. You have options. If let's say you get a vehicle in your company's name and you only use it for business, then you could pretty much write off every expense associated with that. Whereas if you're using your personal car, you're probably going to want to track your mileage more, so you know whether you're using it 50% for business and 50% for personal, or 75% for business and 25% for personal. And the IRS is going to want to know, how did you find that out? They're going to want to know, are you keeping your records on paper, or are you keeping your records electronically? So things like meals, travel, stuff like that, like the IRS specifically wants to know how you're tracking that and reporting that information. So that's another good area that you'd want to keep more detailed records. And even things like utilities, like I would probably suggest, depending on what type of business you have, but you might want to track that on a more detailed level, considering the fact that energy costs are like skyrocketing. Or you might spend more money on phone service, and you want to make sure that you're tracking that. Or you have a shared phone. Like if you use your cell phone for business and personal, that's another category where the IRS wants to know, how are you allocating personal versus business? So determine what's most important for you and how you balance that with the time that it takes to do that type of recording. Any questions on this right here? Okay, well, let's flip over to production costs. So what are production costs? As I was talking, forgetting about paying yourself, which we never want to forget about that, but forgetting about that and some of your overhead costs, if you just want to strictly know what does it cost you to grow that head of broccoli, that's pretty much going to be your production cost. That's everything from like seeds, nutrients, water, pest control, weed control, labor, supplies, crop insurance, product insurance, if you have some value-added products, labeling, packaging, soil testing, literally everything that it takes you to actually grow that crop. And for the most part, they're going to be variable costs. Although things like nutrients, seeds, like you're going to buy them in a certain quantity. So you might buy them 5,000 seeds. Even if you only use 100 seeds, you've still bought 5,000 seeds. So they're variable, but also there's a fixed component to it too, based on how much you plan to purchase. Any questions on that? No, okay. All right, so this is an example of if you wanted to build out, this is sort of what an enterprise budget would look like. It's like everything that goes into actually producing that. In this example, what we're doing is we're bringing in all of our costs to actually produce something, but we're also looking at it at a detailed level where we can see that risks and opportunities. Like in this example, you can see the water. I actually went and looked at, okay, what would it cost to grow 10,000 bunches of kale? How much water would that be? And then I went to WSSC and I looked at the cost of water per gallon. And that's where I got this from. And this was kind of a low estimate because I was like, there's no way that anybody is actually spending this much money, but it really is high. So, doing this type of, breakout allows you to see where your opportunity is, because as you can see, $15,000 for water, it's significant. You might decide, hey, I want to invest in rain barrels or something like that, or I might want to dig a well depending on your location, so really building this out kind of allows you to see, well, if I do this, then I can, net a bigger profit. So this pulls in, water, the labor based on how many hours you think you'll need help, the estimate for the total labor, your compost based on how much you think you need per cubic yard, organic pesticides or whatever you choose to use, rubber bands. Like, let's say you don't want to use any bags or anything like that. You just kind of want to present it neatly with rubber bands, and you want the customers to, either use bring their own bags, or you want to use like some type of bulk packaging. So you're just going to get rubber bands, and of course you need seeds, but you're going to invest in 5,000, whether you use 5,000 or not, you still have to buy 5,000 because that's the quantity you decided you needed. And that gives you $22,468 in total for all of your production costs. So based on the space that you're using and the, what you choose to invest in as far as all of your inputs, you estimate that you're going to get 10,000 bunches of kale. You take your production costs of basically 22,500 and divide that by 10,000, and that gives you $2.25 per bunch of kale. You might decide to price that at $3.50 because that's what the market says. You don't have anything that differentiates you, and you're not in an area that will fetch you a higher price. So you decide the market says $3.50 is the price. Well, that means you have $1.25 left over. And for 10,000 bunches of kale, that gives you a gross sales of 35,000 and a net sales of 12,531. So this brings me back to where we were talking about earlier about gross profit margin, net profit margin, all of that stuff. Looking at this, does it help to better quantify those ideas that we were talking about earlier? And any questions on this part? Come on, guys, these are really complex information here. I know you must, are you confused? Does this make sense?
It makes sense, and it really opens your eyes to how much you're actually spending
Right,
to create a product or grow something, and you spending almost more money on one aspect of it than you're earning. So you're in the hole here.
right, exactly. And this will help you decide too what crops to grow. You know what I
I'm
mean?
not like me, I'm not growing potatoes for no reason.
Right.
For the time it would take to grow a potato, and I could go to the grocery store and get 10 tons of potatoes for what I would pay for water, just
Right.
to try to get the potato to grow. So it doesn't make sense for me to grow potatoes. I'll find a potato grower and I will buy it from him. So that's, or him or her. So it opens your eyes.
It does, but now think about this. It may take you the same amount to grow an heirloom tomato as it does a traditional tomato, but an heirloom tomato, you know, you might get a higher profit from that because it's rarer, you know what I mean? Or you might identify a similar crop that is in high demand. Like, for example, like we were talking about this morning, like the Nigerian spinach versus callaloo. You know what I mean? It might cost you the same to raise them, but because of the market, you might get a higher profit margin. You know, so again, this goes back to the importance of understanding these numbers and how you can use it to actually make decisions for your business. So again, going back to those numbers, you know, it really helps you to identify risks and opportunities. Again, like I said, water was one of the highest costs in that previous example, 15,000. But you might decide, hey, I can get a grant for a rain cistern, and that will take 15,000 out of my total cost. Now, instead of paying my employees $10 an hour, I can pay them $20 an hour and still have a higher net profit margin. So that really understanding those costs allows you to make decisions that can increase the quality of your life and the quality of your employees' life and the financial stability of your business. Or you might decide maybe you're using traditional pesticides and you want to transition to organic pesticides. When you know this information, you can make those decisions. And then you'll also be able to consider, well, if I go organic, I can sell my kale for $5 instead of $3.50. So this is basically the same information. It's just with some changes, basically taking out the water. And how you can see in this example, once you eliminate that 15,000 and you're paying your employees a higher rate, you're still making $10,000 more in net sales from $12,000 down to $22,000 because you decided to invest in a rain cistern, which is more sustainable at the end of the day too. And then what's not included in production costs are things like selling expenses and overhead expenses. So like I said, the production cost or the cost of goods sold are really your direct cost to grow that. Things like market fees, like your farmers market fees, your mileage, the marketing. Like for me with my mushrooms, the biggest question that people have is, what do you do with them? How do you make them? So I print out like recipe cards. I also have, banners. I have all different things that business cards, things like that. So that's not included in your production costs. Bags, some packaging might be included, but like your shopping bags might not be included. And some of them might be variable and some of them might be fixed. Like if you do a lot of credit cards, some customers will pay in cash and some will pay by card. So not all of your sales might have a credit card fee attached to it. It might be 50%, it might be 75%. So that might be a little bit variable. And then all of your overhead expenses, like I mentioned, your rent, your insurance, labor, things like that, that's pretty much all in overhead expenses, except for direct labor. So management labor like yourself, or if you have a sales associate or something like that, that's not direct labor expenses, those are going to be overhead. And then allocation, I'm not sure if you guys has anybody heard of allocation or have any experience with allocation at all?
Yes.
Yeah. Well, allocation is a concept in accounting that allows you to take things that aren't directly related to one particular area and apply it to that area based on several criteria. So for example, what's the example I used here? There are 4 methods really. You could do direct labor, machine time use, which doesn't really apply to us too much, square footage or area, and units produced. The method isn't exactly as important as having a rational basis for it and being consistent in your methods. And an example of this would be like, let's say you rent a plot of land, you rent an acre, and you grow 5 different things. I think we have an example here. Right, here we go. You rent 2 acres for $500 per year. On it, you use a half an acre for kale and an acre and a half for strawberries. Half an acre out of 2 acres is 25% of the total area, and 1.5 acres is 75%. So in this example, the allocation method that we're using is the area. And you grow 5,000 kale plants on your half acre, and you average 2 bunches of kale per plant for a total of 10,000 kale bunches per season. That ties back to the analysis that we were doing on the units. And then you grow in the half, what is it? You grow, I think it's 1.5 acres of strawberries. You get 2,750 strawberry plants, and you average 1 quart per plant. So you total 2,750 quarts. Your rent is $500. And then we're using this area as the method of allocation. So 25% of that gets allocated to your kale and 75% of it gets allocated to your strawberries. So 25% times 500 is $250, and 75% times 500 that's not right. This was supposed to be $1,000. So excuse that, but basically you get the point though, that we're multiplying rent times the area to get an allocation of rent. And the purpose of that, taking a step back, is to find the highest and best use for your expenses. So rent is a fixed cost. So you want to make sure that you can grow things that are going to cover that in addition to all of your other fixed costs and the profit that you want to get. So we might say, okay, the cost to grow strawberries is way higher than it is for kale. It makes more sense to do 100% kale. Or even though the cost of strawberries is higher, I'm growing less strawberries for that footprint, but I can charge a lot more for the strawberries than I can for kale. So this is where the allocation comes in, and basically figuring out for all of the expenses that you have that you can't control, it's fixed, what's the best way to turn a profit on that. Sort of a complex thought process there, but does that make any sense? Or do you have questions on that? Or do you understand the purpose of doing that?
Makes sense.
Okay, good. Anybody else questions?
Do you have an allocation method that you prefer to use for your business?
I do, but it's changed over time. So traditionally I've used square footage because I actually have two businesses operating out of the same warehouse. But in the last year, the footprint for my mushroom business versus my plant-based manufacturing center is a lot smaller. And I had the plant-based manufacturing center first, so my lease is actually under that company. But what's happened is it's sort of turned on its head, and now the majority of what I do is the mushrooms. So I've sort of switched that allocation method. And I said you have to be consistent, but when it makes sense to make that change, just be consistent in your theory. So the reason that I changed it is more so based on like the use of all of the resources. So I've actually moved from at square footage into like a percentage of sales method. Because like the income that I'm bringing in through one business is higher, I've sort of allocated more of the cost to that than I would have in the past. Does that make sense?
Yes, it does.
All right, what is this here? So this is breaking down the allocation example a little bit further. Sorry, when I did this, it was a couple months ago, so I'm just kind of refreshing my memory on this. Basically, this is looking at like your total selling expenses. You remember I said that there's basically three categories. There's like your cost of goods sold, which includes selling expenses. There's your overhead, and then there's your like net profit. This is going to be the other part of your cost of goods sold. It's going to be like what it actually costs, not just to grow it, but to actually get it into the customer's hands. So, and you may, the reason you'd be using allocation for the selling expenses is because you might have multiple things at the market. So like, let's say you grow kale, strawberries, broccoli, and, you know, Swiss chard, and, you know, you want to be able to know, like, in addition to the direct costs of production, what does it cost you to sell those things at the market? And this basically breaks down things that are shared, like your marketing fees, your mileage, your bags, your labor, all of the stuff that is covering multiple products. How do you allocate it to each of those products so you know what it costs you to actually get it into the customer's hands? If you guys wanted to take a second and just kind of look at that information and see if you have any questions.
So are you arguing that you would want to have an allocation that's like the same across all of these expenses? Like if I'm allocating 50% of the labor to kale, then I would then do 50% of marketing and mileage and like paper bags and stuff.
Yes. Unless there's some specific reason, like let's say the paper bags are only used for strawberries, then it's a strawberry expense. But if it's like things that are truly shared, then you want to pick one method of allocation, be it like the percentage of strawberries that you're selling versus kale. You apply that to all of the expenses. Your allocation method for things like overhead, like rent, might be different than your selling expenses. Keep that in mind. Or it could be the same. It could be different because let's say you also, in addition to the things you grow, maybe you partner with another farmer and you sell some of their products at the market too.
Yeah, I think I'm specifically looking at the labor and thinking like there's a lot of crops that have like variable labor requirements. And so some crops might like take a huge majority of your labor, but not actually take up a lot of space. Like that might be reason you would do different allocations.
That would be the case here for this like allocation of overhead. You might do that differently for your cost of production. This is just for your selling expenses. So like the labor that you see here is your, like, let's say you hire somebody to work at the farmer's market for you. That's your labor to sell it, not to grow it. You'd probably want to track your allocation for like production versus selling separately. Again, this is like, you have to decide what level of detail you want to do this analysis on. If you're just getting started, this may not make as much sense. But if you have 10 markets and you want to analyze, is this market profitable for you? You're going to want to look at your actual selling costs for that market. And that's
Thanks. That makes a lot of sense. I wasn't like seeing the distinction between those two slides, but like now totally makes sense.
Yeah, for sure. No, yeah. And again, like, don't rack your brain over this. This is just to really introduce the concepts to you so you know where you want to be and at what level. If you decide you're ready for this type of information and this type of analysis, then by all means, it's totally within your grasp to do it. And there's resources out there. There's the extension folks. We're about to get a new urban farm extension person that's going to be helping with some of this business stuff in the next year. I'm sure there's, accountants, of course, and bookkeepers and, different programs that can help you do this when you're ready for it. But understanding some of the concepts will help you to grow into that point. And then this really kind of just rounds everything out. So let's say, again, you want to just look at your total costs per crop, because you're trying to decide, I sell a lot of kale, but is it worth it? Or should I just go all strawberries? Or should I add an additional crop? You want to look at everything, your production costs, that's all of your inputs for the items, your labor, everything that it takes to grow that, plus the selling expenses that we just determined, plus the overhead that we just determined that we allocated for that. And that's everything all totaled up equals $1.63 in this example. The price per unit is $3.50. That means that your net profit per unit is $1.87. And then you multiply that by your units. So your gross sales in kale was 35,000 and your net profit is 21,000. Your profit margin is 62%. Again, this kind of puts those concepts that we talked about earlier into something tangible, like what would you use those dollars versus the margins, and what does that look like? So when you see net profit margin, that's something you can easily Google, like net profit margin of kale, net profit margin of tomato farms, or something like that, where you can sort of see like what other farms are doing or what other businesses are doing. And then in here you have your per unit costs and your total costs. Any questions on that?
Liz, this is a question from Kim.
Sure.
How do you in your business, balance out, products that maybe, make you more money, but you don't enjoy working with as much as some of the ones that don't make you as much money and might, be your true passion, or those things that sometimes you feel like you need to offer as part of your full complement, but could be like a loss leader. How do you, personally sort of balance all of that and justify that?
I think that's a really good question. And I think it's a personal one. Me personally, like I'm just a person that can only force myself to do something I don't like for a certain amount of time. And I'm going to look for opportunities to find someone who does really enjoy it. Like I personally think that you should do things with purpose and passion. And if it doesn't ignite you, like it's not sustainable for me. So I have to gravitate to things that I enjoy and that I see purpose and passion in, and the things that are necessary, but I just can't seem to like enjoy it or find any joy in it, hire somebody or partner with somebody that does it better. Like if I only grow mushrooms currently. I don't have access to land. It just makes sense to focus on the mushrooms right now. But a lot of customers want, you know, crops, they want meats, they want all these different things. So that's where it's a good opportunity to partner with somebody who is doing that. Like our mushrooms are going into other people's CSAs. So, you know, while I may not have the staff to be able to grow, you know, 10,000 crops, somebody might, but they might not have the infrastructure or knowledge to have mushrooms. So I love mushrooms. They have land and all the stuff to grow crops. Let's work together. So, I mean, it's a personal decision, but I don't think that you should force something that's just not working for you. You just look for opportunities to find harmony in everything that you're doing. Does that make sense?
Absolutely. I think that's some great advice. And I don't know, there's maybe some others on here too who have taken a similar approach that they'd want to share.
And I mean, you know, certain like companies, you know, larger companies have a greater tolerance for that. Like grocery stores constantly have loss leaders and they have categories where they make most of their money. Like a grocery store, for example, they waste a ton of food, as you guys know, but also they charge high fees just to be on their shelves. Like finished products, they'll charge you $10, $20, $30,000 to have like a value-added product like a cereal or something like that on their shelves. And if you don't pay that top tier, you're not getting onto an eye-level shelf. You're going to go all the way at the bottom, and they may only have you in 5 stores in the Midwest, not even in your region. So like, you know, big companies, they'll disregard those desires or passion or things that they just don't like to just dollars and cents it. But that's not really the way that most of us, you know, conduct our business. Like we're hands-on, you know what I mean? So there's a business way to answer that, and there's like a real life personal way to answer that.
No, that's great feedback. And that's also partly why we do these open mic nights as well, so folks can kind of learn about what other folks are doing. So if there are partnership opportunities, you know, we can take advantage of them. So thank you for that, Liz.
For sure. And that could also be like, think about your selling. Like some folks don't want to interact with their customers as much. They just want to focus on the growing, but other folks might want to build that personal relationship, you know, find what works best for you and partner with other people sometimes too. So. Yes, I think we're coming up on time. Did anybody else have other questions?
So I had a question. It doesn't have to do with financials, but I'm just curious, how do you find the people that you are partnering with?
In my example, sometimes it's usually just through like networking, doing a lot of like community work, and sometimes people will just like blind approach us. Sometimes I'll see stuff on like Instagram or at an event where I think somebody's doing something really interesting. But for the most part, I do try and do most of the stuff ourselves, because like you do have to balance those partnerships. Like it takes a lot of time and effort to build relationships, which I think is the most important part of a partnership. So I would say just, you know, find those harmonious, like if you find somebody that is a farmer that's doing something compatible and you just have that vibe with them and you think you get along great, then, you know, explore that. But I wouldn't say necessarily like, you know, go after that unless it's built into your business model or you find some harmony in that person and what they're doing. But,
Yeah,
you know,
I was curious about the CSAs. You said that you were, you know, working with a couple of different CSAs to put your mushrooms there. So
yeah, it's been through like mostly introductions. Like Kim had made some introductions. I met people at events, and then I also got connected through the Economic Development Corporation, folks that I had networked in there, and groups like this, you know.
thank you.
Sure. Any other questions? Yeah, Stephanie says she includes fruit from in her CSA from a vendor that she met at one of the markets that she sells at. And that is a good way to connect with a lot of folks too, is the farmers markets. All right, y'all. Sounds like everyone is a financial whiz now.
Well, thank you so much, Liz. This was super helpful. And I just like how you kind of broke it down in terms of, really thinking about the financial impacts of what we're doing and better understanding, how certain crops and services products, really kind of affect the bottom line so we can make informed decisions. So thank you for all those tips that you I felt like we had a little more of a 200 level tonight rather than just your basic 100 level. So we appreciate you. Liz, I do know too that you offer, if folks are interested for their groups, sometimes some group coaching or classes.
Yep, I did one with Eco City Farms, which was where that back presentation originated. If there's, a nonprofit or for-profit or something, and somebody wants to do like a group class, like we can arrange something.
And Liz's farm is in Beltsville. I don't know if Liz, if you want to drop some of your contact information in there. I think I put your website in earlier, but feel free to put that in again. And again, we really appreciate you. I'm going to go ahead and sort of end the formal part of our presentation and thank Liz and all of you all for being on tonight and for participating and for the great discussion. So thank you.
Thanks, everybody.
Month.